Agreement in principles. What are they? Do I need one? And how do I get one? Today, we'll be unpacking it all. So let's get straight into it. But before I do, if you don't know who I am, my name's Josh Tomlinson. I'm the Managing Director of My Mortgage Finder. We are a bad credit mortgage brokerage, and we help people with credit blips get on the property ladder and remortgage their homes. We arrange about £100 million worth of bad credit mortgages every single year, and we have a team of over 30. So, like we sometimes do, I've gone ahead and asked ChatGPT what an agreement in principle is. So, here's what it had to say. A mortgage in principle, also known as an agreement in principle in brackets AIP, is a preliminary offer from a mortgage lender indicating that they are willing to lend a certain amount of money to the borrower based on initial information. It is not a final approval, but it shows that the lender has reviewed basic financial details and is supportive of the loan application. This document is often used to demonstrate to sellers or estate agents that you are a serious buyer and you have been pre-approved, helping you move forwards with the house purchasing negotiations. So I think that's a really good summary, but let me go into a bit more detail now and explain to you in my own words exactly what they are. Now, before I tell you what an agreement in principle is, let me just give you a couple other terms, what they might be known as. Agreement in principle, decision in principle, mortgage in principle. They're all ultimately the same name for the exact same thing. Now, one thing that I want to make clear that they are not is a certificate from a mortgage brokerage without the name of a lender on. And the reason I want to make this so clear is a lot of our customers come to us with a certificate from a completely separate mortgage brokerage called a mortgage in principle. And it is basically a mortgage broker, not a lender, a mortgage broker saying we should be able to get you a mortgage. That's not an agreement in principle what we're discussing today. And a lot of the time, that's just not going to hold up if you're making an offer on a property that you're actually wanting to buy. So just remember, it's not a certificate from a mortgage broker, it's a certificate from a mortgage lender. I'm going to go into more detail now. Okay, so I've told you what it's not. Let me tell you exactly what it is. An agreement in principle should be a certificate that you get from a mortgage lender. So when I say a mortgage lender, I mean somebody like NatWest, Nationwide, Santander, some of the other mortgage lenders that we work with more closely, Bluestone Mortgages, Pepper Money, Together Mortgages. So it's basically a certificate that you do get from one of these mortgage lenders that I've mentioned, or any other mortgage lenders that you might approach, and they will basically say, we are happy to lend you X amount of money based on the credit check that we've done and the information that you've provided, and then using that certificate, you can make an offer on a property and hopefully have that offer accepted. So, a few key things here that will have happened when you've got an agreement in principle. The lender will have pretty much every single time done a credit check on you. That could be a soft credit check, which means that the only person can see the credit check is done is yourself. You can do as many of these as you want and it's never going to harm your credit file or your credit score. Or they might have done a hard credit check, which would mean that other lenders could see that you're trying to borrow money. Just be careful of how many you do of these, because it could impact your credit score and your lending capacity and potential moving forward. So a credit check will have normally been done at this stage. They will have looked at your finances. Of course, they'll have looked at your credit history, and they'll have checked your case based on the information provided against their own lending criteria. And they will have basically said, yep, based on everything that you've told us, we are happy to lend you the money. Now, one thing that I want to make clear, when you have an agreement in principle, although it's a very high chance and likelihood that your application will now be accepted when it goes into the mortgage underwriting process, which is the mortgage application process, it's not a guarantee. It's a very, very, very good indication, and most times it's going to go through because, like I said, they've already looked at the case, and basically what the lender is saying is, providing all of the information that you've provided can be backed up by documentary evidence and the valuation carried out on your property is successful, because they will still need to value the property that you're buying, because that's where they're lending their money against. As long as those two things happen, they are basically saying, we're happy to lend you the money. So, like I said, it's not a guarantee. And one thing I also should add is there is always the chance, although it's very unlikely, that all of the information that you provide is accurate. All of the documentary evidence that you provide backs everything up. The valuation is carried out successfully. The lender, the mortgage lender, is ultimately at their liberty to say, do you know what? We're just not happy to approve the mortgage. We've changed our mind. We've changed our lending policy. We're just not comfortable to lend on this application. That is their right as the mortgage lender. It doesn't mean anything that you've done wrong. It's highly unlikely that would happen, but ultimately it's possible. So, like I said, key things that will have been checked at agreement in principle stage. Of course, your credit history, because they'll have done a credit check. The details that you've submitted, so like your employment status, your rights to work in the UK, how long you've been in your job for, your address history, your finances such as your credit commitments, everything like that should have been checked at this stage. There's two key pieces that are still yet to take place after the agreement in principle has been submitted, and that is you need to upload all of your documentation to the lender, and you'll go through what's known as the underwriting process, where they're going to go through all of the documents and make sure that stacks up to the information that you've provided. And like I said to you, they will just need to go out and carry out a valuation on either the property that you're buying, or if you already own the home, that you're remortgaging. So that sort of leads me perfectly on to the next thing that we're going to discuss, which is, do I need one? Now, strictly speaking, you don't have to have an agreement in principle. There's no requirement for you to have one. You may never need one. It really depends on the circumstances. But what I would say is, if you are buying a home, pretty much every single instance that we see, people will need an agreement in principle. And that's because if you're going to go and view a property and you want to make an offer on that property, the person selling the home and the estate agent will want to make sure that you have the means to actually buy that property. And the only way they can check that before they accept the formal offer for the purchase is by viewing something like an agreement in principle. Of course, if you're going to be getting the mortgage, it's really the only way that they can qualify if you're a realistic buyer or not. So, like I said, if you want to go view properties, make offers on properties, there's really going to be very, very few situations where you can bypass an agreement in principle. So, 99 times out of 100, I would say you are going to need one. The same will go with if you're buying a new build property from a site. Ultimately, these people who are selling the homes on the new build site, they are going to ask for an agreement in principle as well, because exactly the same applies. They will want to make sure that you are a qualified buyer. So I think, generally speaking, the best thing to do here is, if you're thinking about buying a property and you want to make an offer on a property, the best thing to do, in my opinion, plan early, get an agreement in principle. You then have a very, very, very good idea that you know this is possible. That then gives you the peace of mind knowing that you can go to the viewings and actually make an offer on a property and have the offer accepted. One of the most disheartening things for us as mortgage advisors is when a customer doesn't do this. They come to us, they say, I've seen this property, it's the home of my dreams, I can see myself living there, I want to make, I just need this agreement in principle, so they'll accept it. We look at the application and we say, this is just never going to happen. And unfortunately for that person, they've then set their heart on the home, and unfortunately they become let down. But if you do it the other way, we plan first, we get the agreement in principle, you then go to your viewings. That's going to put you in a much better position, because you actually have the knowledge of what you can and what you can't afford. So we know what one is, we know if we need one. I guess the next thing we need to cover is, how do I get one? So you've really got two main options on how you get an agreement in principle. You can either try and do it yourself, or you can use a mortgage advisor or a mortgage broker. Let's talk about, first of all, trying to do it yourself. So if you try and do it yourself, this is definitely possible. You can look at different banks that might lend to you, and then you can apply with that bank directly for an agreement in principle. And then obviously you may or you may not get that approved. What I would say is, if you're going to do it this way, nothing wrong with that at all. Just be mindful if the bank or building society that you're approaching do soft or hard credit checks, because if they do a hard credit check and you're doing lots and lots of these, this can impact your credit negatively. If they do a soft credit check, you can do as many of these as you want. And also, I would just say, do your research, really try and know what you're looking at as much as you can, and to see if you qualify with that lender. Because if you haven't done your research properly, just because you passed that agreement in principle, if you haven't looked at all the fine details and the requirements from that mortgage lender, there is the chance you could get the agreement in principle. You can try and to take that onto the mortgage application, and then ultimately they could look at it and say, oh, actually, you haven't been in your job long enough, or something like that, just because you've missed that piece of criteria. So I would just say, make sure you do your homework, you're very read up on it, and just be mindful of what type of credit check that lender would do. Okay, the other option that you can do is you can obviously use a mortgage broker or a mortgage advisor, which is a professional who works in the industry and will advise you and help you arrange the mortgage. If you do it this way, clearly they will do the research for you. They should have a good and intricate understanding of that mortgage lender's criteria and their lending policy. That way they can assess what their lending policy is, really understand whether you're going to be accepted before we put in that agreement in principle. And then when we actually apply for the agreement in principle on your behalf, we at that stage know that we've got a very good chance of it being approved. So they're the two options. Which one is right for you? I don't think there's a right or there's a wrong. It's just down to personal circumstances. Ultimately, if you're not sure what to do, I think the safest thing is ultimately to get some advice, and then at least you can weigh up the pros and the cons of each. Once you've had a chat with a professional and a consultant, you can decide on which option is the best for you. So there you have it. We now know what an agreement in principle is, whether you need one, and then how you can get one. So, like always, if you have any questions, feel free to pop us a comment in the comments below. Alternatively, you can send us an email, and the email is in the description. So, thanks for watching. Please make sure that you hit the subscribe button and turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.